The U.S. benchmark WTI rose above $90 to a fresh high for the year on Thursday. And the world benchmark, Brent crude, also hit a 10-month high the previous day. What's behind these continuing increases? We're joined by Professor Hur Joon-young this morning. Welcome to the program.
Hello. Good morning.
Professor, first, walk us through the reasons behind the oil price hikes. Now, what's driving the soaring prices? I hear the flood catastrophe in Libya has also to do with it, right?
Yeah, that's right. So both supply and demand side effect are going on. So from the supply side, Saudi Arabia and Russia, they extended voluntary supply cut, which was expected to be ended at the end of this month, but they extended into until the end of this year. So the supply side effect will go on. And also, on top of this, OPEC member Libya shut down its eastern oil export terminal due to the deadly storm. And OPEC Plus member Kazakhstan reduced daily oil output for maintenance. So, I mean, these are the supply side effect. And also, I mean, we are at the pace of the U.S. interest rate hike. I mean, it's coming to an end. Though I mean, though the world economy will be bouncing back soon, so people expect that. So demand side also there's driving high demand of oil. Due to the better expectation about the future economic condition.
Right. You just mentioned the U.S. inflation also being influenced by this price hikes. Now, the U.S. Consumer Price Index ticked up 3.7% on year last month, and also because gas prices climbed. Then the question is, how much higher will the prices actually go?
Actually, every 3 months, the FOMC members, they have their expectation about the future economic outlook. So the most recent forecast is coming from the June forecast. I mean, the FOMC members, they expect that at the end of this year, the inflation will be 3.2%, but the latest number of PCE, personal consumption expenditure, inflation is 3.3% in July, but due to the rising oil price, I think their expectation in this month, in September release number, will be slightly higher than 3.2%. So, which is still a lot higher than the Federal Reserve inflation expectation of 2%. And the Fed official, they believe that inflation will be reaching to 2%, their goal until the end of 2020, I think, 5. So maybe we'll have 2 more years to go up to until the inflation is brought down to 2%. So it's kind of time needed.
Right. In line with what you're saying, Saudi Arabia and Russia are expected to extend their oil cuts to the end of the year. Now, is there anything that can be done to bring the prices down in the meantime?
The thing is, the Federal Reserve, U.S. monetary policy is the key. So, people in the market, they are worrying about, whether or not there's one more interest rate hike from the Federal Reserve. Because higher interest rate, maybe it reduces, aggregate demand, and then maybe it will affect the inflation, and so that the inflation can be brought down. So, that's the only way, I think, from the, demand side. And supply side effect, maybe inflation is affected by global oil price, but there's, not much thing that we can do about the global oil price. So maybe, it's up to the OPEC or OPEC Plus, their supply, how much supply they do. And also it will depend upon the, the global economic condition. Currently the Chinese market is not in a good sense. Because of the, their real estate market.
Right.
But if their demand will, if that bounce back, it will have a kind of downside effect of higher oil price. So maybe things are dependent upon this kind of global economic situation as well. So.
Sure. Many experts are predicting that the U.S. central bank's fight against inflation will be trickier if oil prices continue that, upward trend. Then will surging oil prices be a variable to consider at the next FOMC meeting next week? What's your outlook?
Yeah, so I mean, next FOMC meeting will be held in this month. I mean, people expect that this month the Federal Reserve will like maintain the same interest rate. I mean, 5.5% interest rate. But the thing is, whether or not this like higher oil price will affect their decision on November, which is the next FOMC meeting, and it will depends upon how long this like higher oil price will go. So if this kind of trend will persist, maybe the Fed will be considering another interest rate hike in November. If not, maybe like the 5.55 will be the like terminal interest rate, and then next year maybe the Fed will start to, decrease the interest rate, maybe.
All right, Professor Hur, thank you so much for your insight this morning. You have a good day.
You too. Thank you.